Welcome back to Investing with Confidence. As always, I'm your host, Joshua David. Having a great day, a great weekend here, talking about the financial markets, not just the stock market, but the whole financial markets. If you happen to miss 2 tickets for the investing class, call 952-814-4410. You can also text the word INVEST to the number 484848. You'll receive a link back to register for the free class. You also receive the Financial Quick Start Kit when you attend. If you're just tuning in, Al was shedding some light about proper education. Having proper education and gain a skill, learn a skill to time the market and have the odds in your favor. It's all about understanding where the buyers are, where the sellers are, but also who is moving that price. Who is the buyers? Who is the sellers? And we talk about it every single week. It's the banks, the institutions. So the key there is to have a core strategy which is designed to trade with them. So, Al, you wanted to get into this next segment. We have a lot of listeners that, even though the market is soaring right now, it has been for years, they still are a little bit behind on their income goals or retirement goals. Now, some people are not really in the market and they want to get started, but you want to talk a little bit about how you might be able to have the potential to catch up if you're behind, but also how to start properly with the financial markets.
Yeah, you said something there in your introduction, though, that I want to comment on. You said something along the lines of, the smart money, you want to trade with them.
Yep.
Because the truth is you are either trading with them or you're trading against them.
Yeah, do you want to trade against a huge financial firm?
Well,
no, you
yeah,
don't.
Yeah, think about it. If you, maybe to you, maybe a $10,000 or $20,000 trade is a big one. But how is that going to do competing with someone on the other side of the trade with 50 million or 100 million? Who's going to win that battle?
Just to give an example, too, is the public, the retail investor, a lot of our listeners, it's like a needle in a haystack. And so anybody here, we can't move the market because it takes billions of dollars.
Right.
So you have to just trade like them, or that old saying, if you can't beat them, join them.
Well, and that's exactly right. And it's adapting the mindset of the pros, the smart money, and finding out what they're doing or where they're going to do it is not an easy task. I mean, you can look at a price chart and you can use some of the indicators or the technical indicators that the pros or the seminar junkies and the
that YouTube
investment newsletter people talk about. But it's not going to help you identify where these guys are going to be positioning their trades in the future. That's what the core strategy is designed to do. The people that are coming into these classes, Josh, they're primarily 3 questions they're asking because they've listened to the show and they've heard us talk about it, but they want to know, how do I protect my assets? How do I benefit in a down market, in a sideways market, and how do I increase my rate of return? And it starts with the protection. That's the number one thing. And the way you do that, first of all, you protect what you have. Protect your investment, and then also protect your profits. If you're not doing that, if you're letting corrections and bear markets deplete your portfolio, it's like putting your portfolio in a hole. It has to claw its way out of that hole just to get back to the point where you can start making a profit. That's a waste of your time, and that's one of the most precious assets that you have. You can't go through periods of 2 years, 5 years, 10 years, or maybe 20 years just to get back what was lost in maybe a matter of a few months. And the market can do that to you. So protection is huge. And then also learn how to and when to use the assets and strategies that give you the opportunity for outsized returns. In other words, maximize the power of each of your investment dollars. You have to increase your rate of return potential by using something like leveraged assets along with the timing strategy. Think about it. Why does the smart money, why do the successful pros that we were talking about, why do they use the leveraged assets, and why are you not being taught about it? Well, that's one of the things that we concentrate on in these classes. What are these leveraged assets? Why do people use them? When should you use them? It also gives you the opportunity, and this should be a part of what you do in your trading, be able to move your money where the opportunities are. That kind of is taken away from you in the traditional Wall Street buy and hold strategy because things change. If you look at what's happening in the market over the last month or so, the sectors that have been the leaders have been changing. For a long time, it was the technology stocks that really moved this market. There were 5 or 6 stocks that really were responsible for the majority of the move of this last bull market. Well, now maybe the energy has been doing well. There are several sectors there, and you'll see rotations as far as the money going from one to another. That's the smart money moving their money. You can do the same thing. Just learn how to identify where the smart money is trading. Just kind of ride their coattails. The great thing for us is that with our core strategy, into that strategy, they're actually like telegraphing what they're doing. And core strategy is designed to be able to take advantage of that because of the way they have to trade. We mentioned that they're trading maybe hundreds of millions of dollars sometimes in a trade. Warren Buffett did one trade in IBM, 64 million shares, $10.7 billion in one position. The way he had to do that actually took him 9 months. That's part of what we concentrate on with the core strategy is using what guys like Warren Buffett and the big firms have to do to take a full position. It's just feeding us information and letting us be ready with a trade setup, and then let everybody else come in and provide the profit move for you.
Yeah, the big banks and institutions, they move that market. So we want to understand how they do it. We don't need to know why they do it.
No.
How they do it, but identify that on a price chart. And you mentioned something I want to make sure our listeners understand is they telegraph their hand. I mean,
right.
I like to play poker, and I got some buddies that are not good poker players, and they telegraph
they do.
when they are bluffing. You can just tell some of the things that they do. They get a little nervous and they smirk a little bit. Well, they're telegraphing what they're going to do with their hand, and that's what we want to identify in a price chart is where these banks, institutions could potentially be buying and selling, but have a strategy that's designed to time that market. Al teaches investing classes right here on Bloomington and talks about how to time the market by letting price come to you. So I want to invite you to an investing class. I'm going to make it easy for you. You can text the word invest to the number 484848. You receive a link back in a text to register for the free class. You're also going to get the Financial Quick Start Kit, which actually covers how to time the market by letting price come to you. You receive that when you attend. Text the word invest to the number 484848. So, Al, you mentioned leverage, right? That's maximizing your capital, basically getting more bang for your buck. I like to make it easy, right?
Yep.
Now, we have a couple different markets where you get major leverage. When I mean major leverage, it's a leverage to use less capital is what that really means.
Right.
Talk a little bit about those assets, why you would utilize them, what they are. Don't forget my favorite now. But but why are so many people, when you're teaching these investing classes, why are so many people gravitating towards these and the benefits, pros, cons, all that stuff?
Yeah, well, that's a great question. The people that come into the class, I would say the majority, 90-some%, maybe 99%, are familiar with the stock market and the mutual fund market, and that's what they think they're going to continue investing in. And you certainly can, and there are advantages to investing in the stock market. But by the time they leave the classes, their interest really has moved, has changed, and now they have a real interest in those leveraged assets, the futures market, the foreign exchange market, the options market. And in fact, when you start talking about leverage, maximizing the value of your dollar, it's like taking a dollar and multiplying it 50 times or 100 times or 20 times. A smaller account can now actually participate with into a much larger investment. And in fact, it almost seems like it's not real or not legal. And oftentimes we'll have people just go, how can that be?
Well, Al, everybody uses that in their everyday life, though.
Well, sure they do.
People have credit cards. That's leverage. You're maximizing your credit card company, right? A mortgage.
A mortgage is one that
leverage.
most people understand.
So essentially, it just requires a certain amount of capital, and then your broker, I don't want to tout any brokers or anything, but like a Schwab or something like that, they will actually give you leverage or buying power, so you don't need that physical capital. So it allows you, like Al says, to start with a smaller amount because of that leverage.
Right. And a lot of people right now, if you look at the value of some of the individual companies out there, their stock price, it's very high. And because of that, it's kept a lot of people out of the stock market or out of investing in a stock that they might want to own. Well, there is a way of being able to participate in most of those companies with a much smaller amount, a fraction of what the actual market price is at this point in time. And that's one of the leveraged assets that people really gravitate to once they learn of the value of it. So it's like every one of the pros out there, all the firms, they're using these leveraged assets. They're not, in most cases, using those with their clients. Mm-hmm. And one of the reasons is that they're more short-term in trading. Don't have to be, but typically if you're looking for short-term cash, it's something different than a long-term stock holding. And typically when you buy a stock or put a stock portfolio together, your advisor will tell you, don't worry about what's going on here short-term because this is long-term. You're in this for decades. Well, maybe you don't want to be in something for decades. Maybe you need a little extra cash now. A nicer vacation, or like you just took a nice vacation.
Yep. I'm glad you mentioned that, though, the shorter term, because if you think about it this way, and I want our listeners to kind of visualize this. Stock market is at all-time highs, right? Mm-hmm. Buying a stock for the long haul potentially might not be the right thing because we are at all-time highs.
Right.
So having short-term strategies for times like right now, and then you want to buy stocks when they are low. That's right. The buy low, sell high concept, right?
Yeah.
So with these, like, say, different commodities, there's different commodities that go up when the stock market's going down and vice versa. Think about oil. Oil has been soaring for the past, year and a half or so. Great opportunities there. Mm-hmm. What are some other, things people can trade with futures?
Well, you mentioned oil. That's part of the futures market. You can trade. Futures is basically an asset family where you're looking at what something will be worth in the future. Will it be worth more than it is now? Will it be worth less than it is now? And you can participate both ways. So that's a way of participating in up markets and down markets. You're looking at things like the major stock markets. So if you want to trade stock, you can do that in the futures market, but with a much smaller upfront investment. You can trade commodities. Your favorite, of course, is
that'd be lean hogs.
Lean hogs. We don't know why, and I'm not sure I want to know why, but but for some reason it is. But you were talking about corn, sugar, soybeans, coffee, gold, silver, precious metals, currencies, interest rates, a number of different things within that family.
Speaking of coffee, Al, did you know that Starbucks cold beverages have been massively outselling the hot coffee in the U.S.? Fun fact of the day.
Well, look at the temperatures across the country.
I know.
I can understand that. The last thing you want to do when it's 100 degrees is have a real hot cup of coffee and go for a walk.
Yeah.
But and coffee has really gone up in value too. I mean, that's has
kind of where I was
exploded.
leading you towards. It's been soaring. A lot of it because people are consuming a lot of coffee.
Sure.
So I mean, if people want to invest in Starbucks or whatever that may be, well, maybe use the market to hedge some of your coffee drinking. If you're spending a lot there, maybe you might be doing better in the coffee market as well.
Exactly. And in fact, at the Online Trading Academy, we have a 2-day session coming up this week where one of the topics there is using assets, maybe one asset to look at how to invest in another asset. But that's a great example, coffee. If you see that coffee futures have gone way up, there's a good chance that Starbucks probably is going to be impacted by that. So it gives you an idea. Even if you don't trade futures, it might help you to make better decisions in another asset.
Yeah. And we do drink a lot of coffee around here.
I got a big cup right in front of me here.
Big gulps, eh?
Mm-hmm.
Well, see you later. Al, we have a lot of people that want to know more about these different markets. When you're teaching these investing classes, talking about the futures market, it really opens up that O word, and that's opportunity. And then people feel like they're missing out on those opportunities. So I want to give away some tickets to an investing class where Al teaches these different techniques and strategies, how to manage risk and navigate these volatile markets. But we've been talking a lot about timing, how to time the market by letting price come to you. So call 952-814-4410 for 2 tickets for an investing class right here in Bloomington. They're a physical class. They're free. And they're about 2 hours. 952-814-4410. Al, what's next?
Well, in the next segment, I want to talk about this subject. We have talked about it before, but it's something that people really should be aware of. Would you be upset if someone took 50 to 75% of your retirement savings away from you? They already have.
Okay, let's find out what that is coming up next. 952-814-4410. We'll be right back.